When it comes to stock market trading, there are several effective strategies that traders can use to achieve their financial goals. Each strategy is suited to different types of traders and market conditions, so it's important to find the one that resonates with you the most. First, there's day trading, which involves buying and selling stocks within the same trading day. To be successful in day trading, you need to have a good understanding of market trends and the ability to make quick decisions. This strategy relies on technical analysis, using charts and indicators to predict price movements, as well as focusing on stocks with high trading volumes and price fluctuations. Another popular strategy is swing trading, which aims to capture short to medium-term gains over a few days to weeks. Traders look for swings in stock prices using technical analysis to identify trends and reversals, and they use risk management tools like setting stop-loss orders to limit potential losses. If you prefer a longer-term approach, position trading might be more suitable for you. This strategy involves holding stocks for several months to years and relies on fundamental analysis to identify undervalued stocks with growth potential. It requires patience and the ability to hold positions through market fluctuations. For those who prefer making numerous small trades to profit from minor price changes, scalping might be the right strategy. Scalping requires speed in executing trades and the discipline to stick to a strict trading plan. Momentum trading is another strategy that involves capitalizing on stocks that are trending strongly in one direction. This strategy requires trend following and volume analysis to confirm trends with trading volume. Lastly, there's algorithmic trading, which uses computer programs to execute trades based on predefined criteria. This strategy involves automation to reduce human error and emotional decision-making, as well as the use of complex algorithms based on advanced mathematical models. No matter which strategy you choose, it's important to always set stop-loss orders to protect your capital. Stay updated with market news and trends, and spread your investments across different sectors to reduce risk. Take the time to consider which strategy resonates with you the most, or if you have any specific goals or preferences for your trading approach. With the right strategy and approach, you can increase your chances of success in stock market trading.